Hi, I'm Calvin Rose, and welcome to Market Minute. If you like this video, please hit the like, subscribe, and notification bell so you'll never miss an upcoming episode of Market Minute. This past week was pretty rough in the markets, and I'm really not surprised given that we were coming into a 3-day weekend. Oftentimes when there's a 3-day weekend and there's a lot of doubt in the world and a lot of turmoil in the world, the markets will sell off going into the last day before the weekend, and this one was no exception. Let's take a look at what's going on. A week ago, the equity risk in the markets was high, and this week it's moved even higher. And there are a couple of ways we can show that. So let's first of all look at our equity versus safety model, where we use natural selection to rank these various ETFs. And some of them are equities like the Qs, SPY, IWM, and DIA. We throw cash in there, and then we have long bonds, short, very short. These are T-bills, intermediate bonds, and gold. So you can see 2 weeks ago, equities were on top of the world. Things were going well. Cash was kind of in the middle. Interest rates were not in a good place, and gold was way down here. Now, if we go to a week ago, the Dow was still doing okay, but cash was moving up, meaning the S&P 500 and the Qs and the small caps were all becoming more risky. Gold was moving up, and as you can see, long bonds, long treasury interest rates were really not in a good place. Now let's fast forward to this week. Gold is at the top of the list. It's gold and cash are the only places to be right now. All the risk assets are not doing well, and long bonds are certainly not doing well. So let's take a look at now just the equity side of this. So if we look at the S&P 500, these are this is showing the buying and selling pressure for the S&P 500. You can see that the orange line, which is the selling pressure, has been steadily increasing over the past 3 weeks or so, while the buying pressure, the gray line, has been steadily decreasing. In fact, they crossed right back here. If we look at the NASDAQ 100, the Qs, same thing. You can see that the selling pressure, the orange line, has been increasing. Buying pressure has been decreasing. And you can see that this was going on even when the price was still going up here. So that leading into this was telling us that it wasn't looking good. And then certainly right here about the peak, they crossed. You can see what happened after that. Now we'll take a look at the Dow Jones Industrial Average. This has been holding up a little bit better, as you remember from the equity versus safety natural selection tables that I showed earlier, and you can see that here. But even so, buying pressure has been steadily decreasing, and selling pressure has been steadily increasing. Now let's take a look at gold risk. A week ago, gold risk was at low, and today it's still low. And if we look at the buying and selling pressure for gold, you can see that it was kind of choppy here. Gold really had a nice run up here, and you can see that buying pressure peaked out here and then kind of dropped and wobbled here. Gold kind of went sideways, but now what's happening is it looks like the buying pressure is increasing and the selling pressure is decreasing, and the price of gold is going up. We'll see if this continues into the next coming week. Now for interest rates, as I mentioned earlier, long bonds, long treasuries are very high risk right now. The yields are going up and the prices are coming down. And this is the same today, very high risk. Okay, now we'll take a look at the buying and selling pressure for TLT, which is the ETF that represents the 20-year government treasury. You can see the price has just been getting clobbered here over the past couple of months. And recently, selling pressure shot up again above the buying pressure. You can see that here, and the price really started to decline. So long government treasuries are not the place to be right now. On the cryptocurrency side of things, a week ago, cryptocurrencies were at high risk, and before that, they were actually at very low risk. They were doing really well. So cryptocurrency risk today is still high, And if we look at the buying and selling pressure, you can see back here, cryptocurrencies had a really nice rally, and the buying pressure peaked out back here and started dropping off. But now you can see what's happened is that the selling pressure, the orange line, has jumped above the buying pressure, and the price of cryptocurrencies has been falling. In fact, if you look at the 1 month trend, the orange dotted line here, the small dots, you can see that the trend has been increasing for selling pressure while the buying pressure has been decreasing. That's all we have for this week's Market Minute. If you like these videos, please hit the like, subscribe, and notification bell so you won't miss one of our upcoming episodes of Market Minute. I'm Calvin Rose, and thank you for watching today. That's all for now.